these 6 of them. So let's see how to finish resignation, eligibility, rights, then professional regulation and harmonization. All of them have quizzes too to help us catch up very fast. So let's see how to run fast. If you can complete this session today, it will be good so that the next class will meet and we'll run through the other sessions. Okay, so talking about resignation of auditors, the auditor can choose by will, by himself, to resign during the period of office. The reasons for this may include, number 1, inconsistent or a consistent lack of integrity demonstrated by management or the directors or those charged with governance of the company. Number 2, significant fees remain unpaid. He's working and you're not paying him, or a chunk of his fees have not been fully paid. He can resign because of that. The audit firm can no longer maintain its independence. So the independence is jeopardized of maybe following a corporate action, a consolidation, purchase of a target, or targeting a company to purchase. Some reasons surrounding this could cause or could be a reason for the auditor to resign. The client is no longer profitable for the audit firm. The audit firm could resign. Maybe the client is going down the profit of the company, and so many situations or circumstances surrounding the client not being profitable can be a reason for the audit firm to resign. However, CAMA provides certain safeguards to ensure that the shareholders are made aware of the relevant circumstances or the reason for the auditor's resignation. The procedures for resignation of the auditors, number 1, should be made to the company at its regional registered office, not a branch. So where it's a bank and you have the head office in Lagos, you can't resign to the head office, to the branch in Abuja. It must be in writing to the company in the head office. Take note of that. The company should submit their resignation letter to the appropriate regulatory authority, CAC, SEC, as the case may be. The auditor should prepare a statement of the circumstances, the reason. This sets out the circumstances leading to the resignation. If the auditor believes that these are relevant to the shareholders or creditors of the company, he can also notify them. If no such circumstance exists, the auditor should make a statement to this effect. So the circumstances or the reason leading to his resignation, if the auditor believes it's material enough and it will influence the decision of the shareholders or major creditors of the company, he should notify them. Now, if none of these circumstances arise and he wants to resign, he should make a statement based on the reason to this effect. And the company should send this statement to the commission, the Corporate Affairs Commission, within 14 days of receipt of the resignation. 14 days, take note of. All persons entitled to receive a copy of the company's financial statements, principally the shareholders. So primarily they have the onus to the financial statement, to receive the financial statements, since they are the preparers, unless the court rules that the auditor is seeking to defame the company with needless publicity. So where this arises, the shareholders or the persons entitled, the directors to the financial statement, may not receive the copies from the auditors. So a situation where blackmail, the auditors want to blackmail the shareholders or the owners of the company and they take him to court, the court could decide that the auditor is seeking to defame the company or seeking unnecessary publicity, and can rule or place a rule to ensure that the company is safeguarded from unnecessary publicity. So the auditors may require the directors to call a meeting of the shareholders, that's an extraordinary general meeting, to discuss the circumstances of their resignation. So the auditor can do that. They have the right to do that too, since they were appointed by the shareholders they can call or require the directors to call for a meeting so that they can discuss the circumstances surrounding that. So if default is made in compliance with the above provisions, the company and every officer of it who is in default shall be liable to penalty by CAC and shall specify in its regulation. So these procedures must be followed. And if there's any default in complying with these provisions, a penalty and fine is liable and will be stipulated by CAC based on its regulations. This is very, very important. So the resignation of auditors is quite dicey and is quite, we have to, the circumstances surrounding it has to be followed through due process, and the procedures must be adhered to. So if I remember a case that resonates practically, locally and globally, I think in 2021 is even a recent case. The Nigerian Ports Authority got resignation, the resignation notice from its auditor, Deloitte. Deloitte resigned as the auditor of Nigerian Port Authority due to governance and regulatory concerns. This resignation highlighted Nigeria's regulatory framework around CAMA and the section 412, 413, which outlines the requirements for auditors to resign, and the issues of disclosure, reporting obligations. Deloitte's decision to resign brought attention to corporate governance weakness, regulatory compliance gaps, and potential audit risks, reinforcing the need for strong oversight and regulatory enforcement in Nigeria. So it may not be concerns around financial statement disclosure or lack of integrity, but then looking at the governance and the regulatory concerns surrounding it, the auditor decided to resign, which is good based on section 412, 413 of CAMA. Now, there's also a global case of KPMG and Carillon in the UK in 2018. KPMG were their external auditors, and KPMG faced scrutiny for the collapse or the role it played in the collapse of Carillon. Carillon was in the construction business space, and is a facility management company. While KPMG audited them for 2 decades, you can see that was too long, about 20 years. KPMG resigned following financial irregularities and concerns over the company's ability to continue as a going concern. The scandal led to regulatory reforms in the UK, strengthening auditor independence, requiring mandatory rotation. So that 20 years was too much. And also increasing oversight by the FRC of the UK. So key takeaways. In Nigeria, you see laws like CAMA 2020, section 412, 413, and the UK corporate governance codes ensure transparency in auditors' resignation. One of the key takeaways is disclosure and reporting. Best practice requires auditors to disclose reasons, like we've seen in the case study text, for resignation, allowing regulatory bodies to act proactively. Also, mandatory audit rotation. A key lesson from Carillon and the Nigerian Port Authority shows an importance of limiting long-term auditor-client relationship to a particular tenure to maintain independence. So both cases, local and international, reinforce the need of a robust regulatory framework to enhance corporate transparency, investor confidence, and audit quality. Very, very important. Okay, so having looked at the resignation of auditors, do we have any questions on the text so that we can go into our short quiz quickly? Any questions? Okay, I believe our silence means we don't have questions, and I hope we are not sleeping. All right, so the first question states, which of the following is not a valid reason for an auditor to resign? A, a consistent lack of integrity by management. B, significant audit fees remain unpaid. C, the company appoints a new CEO. D, the audit firm can no longer maintain its independence. What's our pick? Which of the following is not a valid reason for an auditor to resign?
Timothy C.
Timothy C. Okay, good. Thank you for your option. Julie, what's your answer?
I think it's C.
I don't think, you have to be sure. Final answer.
C.
Huh? D?
C.
Okay, final answer C. Rufi, ACA Rufi, what's your pick? I hope Rufi is still on the call. I hope she has not slept. Yes, she's on the call. Rufi, you are muted. What's your pick? Please write down your answers also. We have 2 C's. Rufi, what's your answer?
I think she's sleeping.
Rufi, wake up, wake up, wake up.
I slept off, so.
Slept off a bit. But don't worry, it will soon be true. All right, since Rufi is sleeping, so we have 2 C's. Let's go.
Okay.
All right, so what is the first step an auditor must take when resigning from office? A, make a public announcement in the media. B, submit a resignation letter in writing to the company's registered office. C, immediately cease all audit-related activities. D, notify the shareholders directly without informing the company. What is the first step an auditor must take when resigning from office? Timothy, what did you say?
B.
Huh? B, okay, fantastic. B or C?
B,
okay.
B for ball.
B for ball, okay, I got that. Julie, what's your pick?
B.
Okay. Rufi, have you woken up?
She has gone out.
She has even left. All right. Okay. So we have 2 B's. Okay, let's see. Number 3. What must an auditor include in their resignation statement if they believe relevant circumstances exist? A, a company's financial performance for the last 5 years. B, a statement of circumstances explaining the reason for resignation. C, a letter requesting the company to waive penalties for resignation. D, a list of recommendations for the next auditor. What must an auditor include in their resignation statement if they believe relevant circumstances exist? Timothy,
B.
D.
B, ball.
E, okay, B for ball. Okay, Julie.
I'm still looking.
Okay. What must the auditor include in their resignation statement if they believe relevant circumstances exist? Sure, that was when you dozed off because you were stated in the class.
Yeah. I think it's B. It's common sense.
Okay, you are guessing B, a statement of circumstances explaining the reason for resignation. Is that your final answer?
I think so, yes.
Okay, final answer B. All right, number 4. Who must the company notify within 14 days of receiving an auditor's resignation statement? A, only the board of directors. B, the court and law enforcement agencies. C, CAC and all persons entitled to receive financial statements. D, company suppliers and vendors. Who must be company notified within 14 days of receiving an auditor's resignation statement?
I go with C.
Okay, CAC and all persons entitled to receive financial statements. All right, Julie.
I go with C.
Okay, CAC and the persons entitled to receive financial statement. All right, we'll see. Okay, finally, what right does an auditor have when resigning from the company? A, the right to request a meeting with shareholders to discuss the circumstances of resignation. B, the right to withhold financial records until final payment is made. C, the right to appoint a successor before leaving. D, the right to remove the directors responsible for non-compliance. What's your
Go with
pick?
A.
Okay, Julie?
I'm serious. What right does an auditor have when
When resigning from a company. A, the right to request a meeting with shareholders to discuss the circumstances of
A is
resignation.
the answer, sir. A.
Okay, fantastic. All right. So hope you've taken note of what you wrote, all your options. So let's go. Number one, which of the following is not a valid reason for an auditor to resign? The answer is C. I think everybody got it. Aisha just came in. We've gone long. Okay, so which of the following is not a valid reason for an auditor to resign? The company appoints a new CEO. Correct answer. So this does not automatically warrant the resignation of. So we both got it. So it's nice. No need to explain the wrong answers. Okay, number two. What is the first step an auditor must take when resigning from office? B. So I think both of us got this one too, even though Julie guessed. Submit a resignation letter in writing to the company's registered office. She guessed it and she got it.
Yeah.
Yeah, so that's a good one. So no need to look at the options that were incorrect. Okay. C or 3. What must an auditor include in their resignation statement if they believe relevant circumstances exist? Exactly. So the answer is B, a statement of circumstances. So explaining the reasons for resignation. So that's the reason. I think you both got it, B. All right.
Okay.
Number 4, who must the auditor notify within 14 days of receiving an auditor's resignation notice? Exactly, both of you got it. The CAC and all persons are entitled to receive financial statements. Exactly. Okay, so number 5.
So on this one,
yes, please.
So on this one, actually, if they had been sick, I would have gone for sick because I was a little confused. It was because I didn't see sick. That was why I went for CAC.
Yes, okay. Both of them are commissions. So either the SEC or the CAC, you could pick it. But if they come as differing opinion, then or differing options, SEC and CAC, that's where you may fail it to.
Okay, Tom.
So take note, it's the CAC and it's not SEC, and it was stated in the study text and in our conversation. All right, so finally, what right does an auditor have when resigning from a company? So all of us got it. A, he has the right to request a meeting with shareholders to discuss the circumstances of resignation. I think everybody got 5/5 in this one.
We tried this time around, sir.
I think that's 5/5.
This is good, 100%. Despite Julie who slept up a bit. You guys tried. Good, kudos to you. You're welcome to the call, Aisha. You came late. Nice to have you. We've been having a nice time, especially with the quiz questions.
Honestly, good evening, sir.
Yeah, welcome. Hope you're not just coming from work, closing from work.
I'm even still on my desk.
Oh, so sorry. It's like that sometimes, Bele.
Thank you, sir.
We've been having a nice time. We included quizzes in each section, so we've been having a good time. Julia and then Timothy and Rufi. Rufi just left. I think she slept off. They've been doing very well on the quizzes. So we are going to the next topic or the next session, which is eligibility to act as an external auditor. So please follow through so that you'll be able to answer the quiz questions with us at the end of the session. All right. So let's run. We want to finish these 4 before we close in today's section. Okay, so talking about eligibility to act as an external auditor, self-regulation by the audit profession and best practices to act states that you must be a member of an appropriate regulatory body like ICAN. This is very important because ICAN is the chartered body by law that is allowed to practice or eligible to act as external auditor in Nigeria. The role of such registered bodies normally includes the following: offering professional qualification for auditors like we are doing now, to provide evidence that auditors possess the minimum level of technical competence and they've gone through the training, the rigorous training like we are doing now, to qualify as chartered accountants. Also, establishing procedures to ensure that the professional competence of auditors is maintained. This is key. Professional competence and due care is maintained over time. This includes matters such as ensuring that audits are performed only by fit and proper persons, people who have the technical competence and knowledge, and who act with professional integrity. It's an eligibility criteria. So, requiring that the members carry out their audit work in accordance with appropriate technical standards. For example, in accordance with the international standards of auditing known as ISAs. And also ensuring that auditors remain technically competent and up to date with modern audit practice. For example, the MCPD or MCPDs that ICAN subjects you to. Currently, we have it at 40 credit hours every year. So once you qualify as a chartered accountant, you must maintain 40 credit hours every year to stay up to date through structured and unstructured programs of education, some virtual, some physical, which is very important to keep you abreast of latest developments in the field. And also providing procedures for monitoring and enforcing compliance by its members with the rules of the professional or regulatory body. So these rules and procedures includes investigation of complaints against members, where we have the disciplinary committee of ICAN, and the implementation of disciplinary procedures where appropriate, to maintain a list of also registered auditors. So we have audit firms that must register and take license from the professional body or from ICAN, which is made available to the public. So the license is renewed yearly. So if after a year you didn't renew, you will be delisted. And any public person that engages your services is doing that at his or her own risk. So such a system is referred to as a system of self-regulation, and the ICAN body is very meticulous and serious about this. In such a system, the regulation of auditors is carried out by their own professional bodies, Nigeria, which is ICAN. Also, we have regulation by government. The alternative to regulation is government. The government may appoint a public body, like the government has given the charter to ICAN in Nigeria. The government may also appoint similar bodies to self-regulate that profession. And the professional body may therefore establish rules and regulations for approving and authorizing individuals to perform audit work. So in the UK, you see bodies like CIMA, ACCA, ICAEW, and many other bodies. This is for ensuring the authorized auditors have the necessary minimum skills and knowledge to carry out their audit work to proper standard. And also for handling complaints and taking disciplinary measures against auditors where there are audit failures. Like we've seen some cases, some of the disciplinary fines and penalties meted out on those auditors are part of this regulatory regulation by government. So in addition, it is usual for statute law to establish that certain individuals are ineligible to act as external auditors in the context of a given company, even if they are a member of an appropriate regulatory body. So this is very important to take note of, that the law can make individuals eligible and just give it to bodies to ensure that there are bodies that are organized and restricted to provide this appropriate service to the public. So these exclusions of individuals are designed to help establish the independence of the auditor. This is very important. The independence and audit quality is key in establishing the eligibility and regulatory framework of the audit profession. So if you look at the case, we've spoken to that case in the first class about Cadbury, the disqualification of Cadbury Nigerian auditors, which is PwC. That was in 2006, where PwC were disqualified from auditing Cadbury Nigerian PLC following a financial misstatement scandal. The investigations revealed that Cadbury had overstated its financial position by over 13 billion between 2002 and 2006. PwC, the external auditors, was found to have failed in its duty to detect and report the financial irregularity. So what was the regulatory impact? the Financial Reporting Council of Nigeria and the SEC, Security and Exchange Commissions, they imposed stricter eligibility and independence requirement for external auditors. Also, CAMA, Section 405 and Section 404 and 405, yes, was later strengthened to define the criteria for audit firm eligibility, ensuring integrity, competence, and independence to enhance audit quality. Very important. Another global case that resonates with the eligibility of external auditors was in the UK in 2018. Grant Thornton was the auditor. He's one of the big 5 auditors. A company called Pat Siri Valerie. Pat Siri Valerie is a British cafe, a chain of cafes that collapsed, uncovering about 94 million pounds accounting scandal in their books. The UK FRC found Grant Thornton, the external auditor, wanting to have failed to verify their financial records and also ignoring red flags. And after a conduct of independent audit, they found out the audit was inadequate, raising concerns about competence and eligibility of the external auditors to act for public interest entities. So the regulatory impact was that this audit firm, Grant Thornton, was fined about 2.3 million pounds. They imposed stricter eligibility requirements for external auditors in the UK due to this corporate collapse. The case led to audit reform proposals, including the creation of a new regulator called Audit Reporting and Governance Authority to oversee auditor appointments and eligibility, to ensure that there is no corporate collapse and the incident does not repeat itself. So key takeaways, and if you look at best practice in these 2 cases, strict licensing and eligibility criteria is a takeaway. So only auditors with proven competence, independence, regulatory compliance should be eligible for public interest entities or auditing any of them. Also, a key takeaway is enhanced oversight and accountability. Regulatory bodies must enforce periodic eligibility reviews to ensure auditors maintain high professional standards. And also another key takeaway, finally, is mandatory audit rotation cannot be overemphasized, and independence rules. So long-term audit client relationships could deter and impede objectivity and reduce conflict of interest. So these key takeaways from these 2 cases highlights why strong regulations on auditor eligibility are very essential and cannot be overemphasized to safeguard financial statements and the markets, protecting investors and their interests and their stakes, and also ensuring audit quality. This is very, very important. Okay, so do we have any questions on the eligibility to act as an external auditor? Because that will be the end. Any question? Okay, quickly, let's look at our quiz. Number 1, which of the following is a requirement for someone to be eligible to act as an external auditor in Nigeria? A, being a member of ICAN. B, having previous experience as a director in a company. C, having a stake in a company being audited. D, being an employee of the company for more than 2 years. Which of the following is a requirement for someone to be eligible to act as an external auditor?
Okay.
That was so fast. How come? 3 of us. Hey, wow. That means we were following the
answer.
Okay. I hope you didn't sleep us again. I hope you didn't sleep us again during the class, the conversation.
You're proud of ICAN.
Okay, you're proud of ICAN. That's why you're picking A. Okay. All right, that's nice. I'm also proud of ICAN. Then number 2, What is the role of regulatory bodies such as ICAN in ensuring the competence of auditors? Number one, issuing financial statements for companies. B, providing qualifications and ensuring compliance with technical standards. C, approving the sale of company shares. D, enforcing government regulation on business operations. What is the role of regulatory bodies such as ICAN in ensuring the competence of auditors?
B, providing qualifications and ensuring compliance with technical standards.
Okay, final answer, Aisha?
Yes.
Okay, Julie?
A.
A?
I said B.
Julie said A. Oh, okay,
I
B.
said
I thought you
B.
said A.
No.
Okay. Okay, B. Timothy, what's your pick?
Yeah, I also said D.
Oh, triple B's. All right, we'll see. Number 3, according to CAMA 2020, which of the following individuals is not eligible to act as an auditor for a company? An employee who worked for the company for less than 1 year. A partner of the next one, B, a partner of an officer. No, that should be a partner or an officer or servant of the company. That of, I'm sure, is typo. A partner or an officer or servant of the company. C, a member of a recognized body, professional body like ICAN. D, a person who has no financial interest in the company. According to CAMA 2020, which of the following individuals is not eligible to act as an auditor of a company? I know it's tricky because of the not.
I think it's A for me.
I think it's A. Me too.
Employee who have worked for a company less than 1 year. Okay. 2 A's, Julie and Aisha. Timothy, what's your pick? He said, Tricky question. According to CAMA, which of the following individuals is not eligible to act as an auditor for a company? Timothy is thinking. What's your answer?
I think I'm a little confused, yo.
Because of the not, right?
Yeah, that not could be so confusing.
Not so.
Don't worry, just think it through. Who is not eligible to act as an auditor for a company? We already have 2 answers, 2 A's.
Sir, sorry, can I ask a question?
Yes, please. But yeah, I won't answer the question for you.
Yeah, sorry, sir. This act as an auditor, is he as the internal auditor or as an external auditor, or both?
External, no external. Everything about this conversation is external. You can see it, eligibility to act as an external, not internal.
I'll go for B.
Okay, partner or an officer or servant of a company. Okay, fantastic. So we have 2 A's, 1 B. So write down your options, please. Number 4, under what condition is a person not eligible to serve as an external auditor of a company according to CAMA? Number 1, or A, if the person is a debtor to the company exceeding 500,000. B, if the person has worked for the company for more than 5 years. C, if the person is a shareholder with more than 5% stake. D, if the person is a partner in an external audit firm. Under what condition is a person not eligible to serve as an external auditor of a company according to CAMA 2020? That's our pick. These last 2, number 3 and 4, are a bit tricky. Because of the not.
I think I'll go with A. If
the person is a debtor.
I think I'll go for A too.
Okay, 2 A's. Julie.
I'm still thinking.
Okay, please think it through.
I think A is
2
okay.
A's.
A is fine.
Okay, triple
A.
A's. All right. Okay. And finally, who regulates the eligibility? What did you say?
Well, it's becoming dicey.
Yes, it's becoming dicey, really dicey, and I like it. So who regulates the eligibility of external auditors in Nigeria? A, Nigerian police. B, Nigerian Bar Association. C, regulatory bodies like ICAN and CAMA 2020. D, the Ministry of Finance.
C.
ICAN. C.
Okay. Julie.
C, please.
All right. Aisha.
Sorry. Yes, C.
Okay, so triple C's. Okay, so take note of your answers. I believe you are writing them down. Okay, so let's go. Number one, which of the following, this one everybody got it. Which of the following is a requirement for someone to be eligible to act as an external auditor in Nigeria? A, being a member of ICAN, correct. So 2, what is the role, everybody got this one too, of regulatory bodies such as ICAN in ensuring competence of auditors, providing professional qualifications, providing qualifications and ensuring compliance with technical standards. Everybody got this. This is where it became dicey. According to CAMA, which of the following individuals is not eligible to act as an auditor of a company? The answer is B. So a partner of an officer or servant of the company.
Somebody got it.
Who got it?
Somebody said B. I can't remember who. Someone
yes,
said
I think it's Timothy.
Yeah.
Yes, Timothy, you got it.
Sir, yes, sir.
Even though you guessed. Or did you guess or you were sure of the answer?
Well, the thing is, it's not like I guessed, but the way I don't know, but from my perspective, I think maybe you should explain why A is wrong and why others are wrong. Because I don't know.
So
what I was looking at as if maybe the question was not to be individual that is not eligible. That is, maybe the question would have been that is eligible. I felt even that A is also not eligible. I don't even know. But maybe you should explain to us why the answer is even correct.
Okay, so the answer is correct because a person who is a partner or employed by an officer or servant of a company is not eligible. So you can't be employed by somebody in the company to act as auditor. So like we saw in the directors, appointment of auditors, directors cannot appoint somebody to avoid conflict of interest. So that answer resonates here practically. Then A, an employee for less than 1 year he doesn't belong to a professional body. So don't forget, a partner can be somebody in an audit firm. So A cannot be the answer because he's an employee. Then C, of course, ICAN members are eligible. So the question says not eligible. Then no financial interest is not an answer. So the best answer is B, a partner or an officer or a servant of a company. And the explanation is clear based on the appointment. The person cannot be appointed by somebody employed and to avoid conflict of interest by the officers of the company. I hope that answer is a bit clear.
Yes, sir.
Very clear.
Yes, sir. So someone that has worked in an organization for less than 1 year can still become the auditor. Wow.
Well, he's an employee, so he cannot be. So he's not eligible. All right, so let's go to the fourth one. Under what condition is a person not eligible to act? Wow, I think everybody got this. So fantastic. If the person is a debtor to the company exceeding 500,000, he's not eligible. 3 of us said A, right?
Yeah.
Yes,
I think everybody said
so.
Yes.
Everybody said A, yes. That's good. Even though it was a guess, because I'm not sure you were following the class. It was a guess, but you guys guessed correctly. All right, finally. Okay, finally, this one, everybody got it. Who regulates the external? Yeah, everybody got this one. Okay. Nice. So what was our percentages? 4 over 5. Aisha, what did you score?
I didn't take note of that.
I know you failed one, Sha.
Yeah.
So you scored 4. You failed 1. Then Timothy scored all, I guess.
Yes, sir.
Timothy, you are doing well. 5 over 5. That's good. Your guesses were correct.
We're all trying.
You said?
So we're all trying.
Yeah, so we're all trying. That's good. I like the engagement. Okay, so we have 3 more and we have like 7 minutes. All right, let's run. So rights and duties of auditors. Let's look at rights and duties of auditors. So the CAMA of Nigeria usually impose certain duties on the external auditors, and that is to grant him certain rights and powers to enable him carry out his duty on the company's financial statements. So the duty of the external auditors primarily include examining financial statements. So primarily the scope permeates or revolves around the financial statements of an auditor. This is very important. So the duty is mainly to examine financial statements and issue an auditor's report in the form of an opinion, which is then presented to the shareholders together with the financial statements. So those are the primary duties of an auditor: to examine financial statements and to issue his audit report. The auditor's report will set out the auditor's opinion, whether it's qualified or unqualified, on the financial statements. That the unqualified opinion gives a true and fair view, or present fairly the financial position, which is also the financial performance of the company, and have been prepared in accordance with applicable financial reporting framework, the IFRS, the ISAs. Very important to note in the auditor's report. So in Nigeria, Section 404 of CAMA requires that the auditor also form an opinion on matters stated in Schedule 5 of CAMA as provided below. So Schedule 5 states that whether they've obtained all information during their work, which is to the best of their knowledge, and they believe were necessary for the purpose of the audit. So substantive procedures, compliance checks, and every other tests or controls they've carried out to ensure that, to the best of their knowledge, this was necessary for the purpose of the work. And whether, in their opinion, proper books of account have been kept by the company so far as appears from the examination and the testing of those books by the auditors. And also proper returns, compliance, tax returns, and other returns as regulatorily necessary have been done and have been received from branches not visited by them. So where there are large companies with different branches, maybe banks, the purpose is to ensure that the auditor, they've received returns from those branches and consolidated their findings and their reports based on this scope. It's very important. And the auditors must state that the purposes of the audit have been carried out, and the branches they didn't visit, they made sure that their examination of the books culminated in proper consolidation of those books and the reporting also of their performance and position. And also whether the company's statement of financial position, unless it's framed as a consolidated P&L, or the P&L, which is the income statement dealt with by the report, agree with the books of accounts and returns. So it's very important that the other auditors also provide information on this. And also whether, in their opinion and to the best of their information, according to explanations given, that the said statements give the information required by the CAMA in the manner so required by the law, provides a true and fair view of the company's financial performance. So in the case of the statement of financial position or the state of affairs of the company at the end of the year, and in the case of the P&L or the income statement of the year, or as the case may be, gives a true and fair view, therefore subject to the disclosure of any matters that has come to their notice to be indicated in the report. So where there are matters that are not clear or are not in line with the appropriate regulatory framework, maybe the IFRS, it should be stated in their report. Also, by virtue of Part 1 of the first schedule of that CAMA, the auditors are not required to disclose, in the case of a holding company submitting group financial statements, whether, in their opinion, the group financial statements have been prepared properly in accordance with the provision of this Act, so as to give a true and fair view of the state of affairs and the P&L of the company and its subsidiaries and associates. So it's very important that in cases of holding or consolidated companies, by virtue of Part 1 of the schedule of this SCAMA Act, that they are not required to disclose this. But in their opinion, in the case of holding companies where consolidation of the subsidiaries and associates are available, it should be done. So the auditor's report must state, Timothy is having network issues. So the auditor's report must state if any of the above were not met. Any of the above consolidation or the criteria of the holding, the subsidiaries, the associates are not met, they must state it. And the outcome of the statutory audit is an opinion on the truth and fairness. Very important. So it's just an opinion on the truth and fairness, but then the work must be performed expressly on the financial statements. So the word opinion implies that the auditor has applied his professional judgment in reaching this conclusion. This point is arguably one of the limitations of the statutory audit, because it's not an opinion, even though it's a substantial assurance or reasonable assurance have been provided, but then it's just an opinion and it's limited to some extent. The audit report expresses an opinion, not a statement of fact. It is therefore open to disagreement by directors or the managers of the company. In carrying out his audit work, the auditor is unlikely to check every transaction, so maybe he does sampling. Sorry, just a little network glitch. Can you guys hear me now, please?
Okay.
Yes, okay.
Okay, fantastic. Sorry, network
The
went off.
network has not been good. I could barely see your screen since. That was why I've been going off and on.
Okay, sorry about that. I just had a glitch too. Can you see my screen now?
No, let me go out again.
Okay, please go out again and come back so that you can see it before we get to the
I've been out and coming in
quiz.
since.
Yeah, I noticed it too. Okay, so let me go back a bit. The auditor's report must state any of the fact that has to do with issues with the holding and the subsidiary company. The outcome of the statutory audit is an opinion on the trueness and fairness, and the opinion implies that the auditor has applied his professional judgment in reaching his conclusion. So the point and the opinion may be limited because it's not a statement of fact. It is therefore open to disagreement. His opinion may be disagreed to by the directors of the company. So where he qualifies the opinion or qualifies the report, the directors may disagree. So in carrying out his audit work, the auditor is likely to check is unlikely to check every transaction. Like I said, he may sample, pick one or two things because of the largeness of the transactions and the scope of work and the branches involved. So every transaction may not be checked, and that is why his work may be limited and the statement of fact may not ensure. So therefore, judgment, he may form his judgment, or based on his judgment that he has come to a conclusion to, it may be inappropriate because in performing the audit, he has missed one or two significant items. And that is why the materiality threshold is very important, which is set before or during the audit work, so that testing of material items on the company's books are covered. Very important. So let's look at the rights. We've looked at the duties. The external auditors have certain statutory rights to enable them perform their duties. The CAMA provides the rights, and they are as follows. They have the rights to access the company's books and records at all times. They also have the right to staff, and information, explanation from management necessary for performing their audit work. They have the right to receive notice of all meetings of shareholders, such as the annual general meeting and other special meetings, and they have the right to also attend such meetings. So take note of that. These are the rights of auditors. The right to also speak at shareholders' meetings on matters affecting the audit or the auditor. So they have these rights as well. And Timothy, can you see it now? Timothy, can you see the screen or the slides? Okay, so let me continue now. If he hears me, maybe the network. So the right to attend meetings, AGMs, and every matters affecting the audit, the auditor has the right to attend. This can be important when the auditor disagrees with the directors of the client company and are unable to communicate with the shareholders effectively by any method. So they can attend the AGM so that they can express their concerns and their disagreements in such meeting. That's why they have the rights to attend the meeting. So if the company uses written resolutions, the auditors should have a right to receive a copy of such or all of the resolutions written by the company. Responsibility of management and those charged with governance. Number one is to with respect to audit, and contrary to what many members of the public think, it is management and those charged with governance are responsible for. So what are the responsibility of management or the directors of a company? Their job is to prevent and detect fraud. It's not the job of the auditors. Their job is also to prepare financial statements. Their job is to design effective internal control. So for example, authorizing payments above certain amounts, bank reconciliation, all these are done by management. This is their responsibility, not the auditors. And for example, monthly trade payables account reconciliations, receivables, all those internal work are the job and responsibility of management. They are also responsible for providing the auditors with access to information relevant to preparation of the financial statement. So where softwares and every dynamics are provided in the process of auditing the company, they should provide those access and systems to the auditors. Additional information relevant to the audit, unrestricted access to persons whom the auditor needs access to in order to complete the audit should be given to them. Staff and personnel, they should have unrestricted access to those people. It's also the rights or job of management. Providing written representations to the auditor at the end of the audit. We'll be looking at that in later chapters on modules very, very importantly. Okay, so having looked at that briefly, that will be the end of the right and duties of auditors. So let's look at a brief case scenario very briefly before we look at our quiz. In 2018, we had a case with Union Bank and Akintola Williams Deloitte. The FRCN investigated Deloitte over its audit of Union Bank. FRCN found Deloitte guilty, wanting, and they identified material misstatements in the bank financial statements, particularly related to loan impairments and some of the non-performing loans or assets. So the FRCN ruled that the auditors did not exercise due diligence and professional skepticism, raising concerns about compliance with audit rights and duties as contained in CAMA 2020, specifically section 404 and 405. So the regulatory impact was that the case reinforced the importance of auditors' duty to detect and report financial misstatements. FRCN issued stricter guidance on auditors' responsibilities, including the need for deeper scrutiny of banking sector audits. CAMA 2020 mandates external auditors to report any irregularities to regulators, ensuring and enhancing good governance. And the global case, like we've spoken to that KPMG and Carillon, the collapse of that construction giant with debts of over 1.5 billion pounds. Despite receiving clean audit opinions from KPMG for several years, the UK FRC found KPMG had failed in its duty to challenge Carillon's financial assumptions, particularly concerning revenue recognition and contract profitability based on IFRS 15. So the firm's lack of skepticism and failure to enhance its rights to demand further disclosures contributed to this corporate collapse and misleading financial statements. So the regulatory impact is that we've spoken to that in the last case, looking at the recommendation to impose major audit reforms like appointing the body audit reporting and governance authority to oversee the appointment or the eligibility of auditors. Also, mandatory joint audits, greater transparency were also recommended. Stricter whistleblowing obligations were enforced after this corporate collapse, ensuring auditors' reports, financial irregularities are reported directly to regulators. So what are the key takeaways and best practices looking at these two cases is enforcing auditor duties. Auditors must exercise professional skepticism, due diligence, and independence when reviewing financial statements. Also, another key takeaway is to strengthen auditor rights. Auditors should have unrestricted access to financial records, management explanations, and governance bodies to ensure accurate reporting. Also, regulatory oversight, stronger audit inspections, penalties for negligence, and reporting obligations help ensure compliance with audit best practices. Very important. So these two cases highlight why auditors' rights and duties are very crucial to preventing corporate failures and collapse, ensuring investor confidence, and upholding audit quality. This is key. This is key. So take note of that. And let's move back to our quiz. Number 1, what is the primary duty of an external auditor according to Nigerian law? A, to detect and report fraud. B, to issue an opinion on financial statements. C, to prepare the financial statements. D, to ensure compliance with tax regulations. What is the primary duty of an external auditor according to Nigerian law? Timothy, you're trying to say something. B, okay?
B.
Julie, all right, I copy that. Julie, what's your pick? What is the primary duty of an external auditor according to Nigerian law? To detect and report fraud, to issue an opinion on the financial statements, to prepare the financial statements, to ensure compliance with tax regulation. Okay. B, we have 2 B's. Aisha. Aisha on the call. Aisha, you are muted if you are speaking. Okay, maybe she's attending to something. All right, she would respond back. Okay, so number 2, under section 404 of CAMA 2020, the auditor must form an opinion on all of the following, except, it's becoming tricky. Under section 404 of CAMA 2020, the auditor must form an opinion on all of the following, except A, whether the company's financial statements give a true and fair view. B, whether the company's statement of financial position agrees with the book of accounts. C, whether the company complies with tax regulations. D, whether proper books of accounts have been kept. Becoming tricky. Under section 404 of CAMA, company must form an opinion on all of the following except, what's your pick?
Can you say it again? Your screen is not showing, so I can't see what it's saying, what you are saying. So just help us read it again.
Okay. Under section 404 of CAMA, the auditor must form an opinion on all of the following except whether the company's financial statements give a true and fair view. B, whether the company's statements of financial position agrees with the book of accounts. C, whether the company complies with tax regulations. D, whether proper book of accounts have been kept. I hope you got that.
So I got it, but it's a little tricky.
Yes, because of the knot. Yes. Julie, what's your pick as Timothy thinks? I hope Julie is not asleep. Oh, Julie, wake up.
Yes, I am. I was asleep actually.
I know. I guess that's much. I think after this section we should stop. What do you think? What do you pick?
So I'll go for C.
Already.
Okay, you go for C. All right. So one person C. Don't worry. After this session, we'll stop. We'll continue in the next class. We just have 2 more sessions, so we'll round up in the next class so that we can rest. We're already tired. You guys have tried. So, Julie, what do you pick?
It's supposed to be simple, but I can't comprehend anything right now.
Okay. All right, let's go to number 3. But one person picked C, and that's Timothy. Okay. So which of the following is not a right of an external auditor as per CAMA 2020? A, the right to receive notice of all shareholders' meetings. B, the right to access all accounting books and records at all times. C, the right to prepare the company's financial statements. D, the right to attend shareholders' meetings. Which of the following is not a right of an external auditor as per CAMA 2020?
I go for C.
Okay. C, the right to prepare the company's financial statements. Okay. Julie, can you make a pick?
Hopefully, it's not a right of an
external auditor as per CAMA.
A.
The right to receive notice of all shareholders' meeting. All right, we have A and C. Let's see. Number 4, which of the following is the responsibility of management and those charged with governance, not the external auditor? A, prevention and detection of fraud. B, provide the auditor with access to all necessary information, issuing an opinion on the financial statements, attending shareholder meetings. So which of the following is the responsibility of management and those charged with governance, not the external auditor? Prevention and detection of fraud, providing the auditor with access to all necessary information, issuing an opinion on the financial statements, attending shareholder meetings. What's the responsibility?
I go for B.
Okay. B, providing the auditor with access to all necessary information. Okay. Julie?
So the following is responsible by the and
So the following is the responsibility of B. Okay, providing the auditor with access to all information. All right. We'll see. Finally, what does the external auditor's report express regarding the financial statements? A, a statement of fact. B, an absolute guarantee of accuracy. C, an opinion on the truth and fairness of the financial statements. D, a statement on the company's compliance with tax law. What does the auditor's report express regarding the financial statements? Somebody said something.
C.
Oh, okay. Somebody said C. All right, Julie. What's your pick? What does the auditor's report express regarding the financial statements?
C.
Okay, an opinion on the truth and fairness of the financial statements. Okay, we have 2 C's. All right, we're done with the 5 questions. So let's see. Number 1, what is the primary duty of an external auditor according to Nigerian law? Correct answer, B, to issue an opinion on the financial statements. So Timothy is right. Julie didn't pick anything here. Did you pick anything?
I picked A.
Okay, you picked A. Okay, so A is incorrect,
No.
isn't it?
I wasn't following because
Yes,
I was.
you dozed off a bit. Yeah, I understand. All right, so the answer is.
If you doing the Q&A, I was still sleeping myself. So.
Sorry, you're tired. Don't worry, we'll stop after this correction. So we'll continue in the next class. We just have 2 more sessions to conclude. Okay, so the answer is B. The primary duty of an external auditor is, according to Nigerian law, is to issue an opinion on the financial statements. Okay, so number 2, under section 404 of CAMA, the auditor must form an opinion on all of the following except whether the company complies with tax regulations. So that's he must. The job is to ensure that he confirm whether the financial statements give a true and fair view, ensure statement of financial position agrees with the book of accounts. That's the balancing of both sides, and also check whether proper book of account have been kept, but not to ensure that the company complies with tax regulations. That's the job of management. Okay, so that's number 2. Number 3, which of the following is not
what's the answer?
Okay, number 2, the answer is C. Whether the company complies with tax regulation is not. Yes. Let's see the answer.
Sorry, I can't see your screen actually. That's what I'm asking.
I understand. Don't worry, I'll share the slides after the class.
Right, sir.
Yeah. So number 3, which of the following is not a right of an external auditor as per CAMA? The right to prepare the company's financial statements. I think nobody got this. So the auditor does not have the right to prepare the financial statements. He has the right to receive notice. He has the right to access accounting records. He has the right to attend shareholders meeting, but he cannot prepare the company's financial statement. He's the checker, not the maker.
That's also what.
Okay, that's what you picked. You picked C. Yes, I think I remembered. So it's Julie, I think, that said A, Sha. All right, so number 4, which of the following is the response? Okay, sorry, Julie, you said something?
No.
Okay, I thought Julie said something. Okay, number 4, which of the following is the responsibility of management and those charged with governance, not the external auditor? So the job of management is to prevent and detect fraud. That's the job of management. So we got this wrong. I think Timothy picked, was it B?
I
so
picked
the correct
B.
answer is, yes, you picked B, yes. The correct answer is A.
Okay.
Right. Yeah. Julie picked, what was Julie's pick? Julie, can you remember your pick? Julie is already asleep. She's tired. All right. Finally, what does the auditor's report?
Sorry, sir.
Yeah.
But what's the B option?
The B option is the auditor must be provided with access to all necessary information, but management has the responsibility to provide it.
Is this not also an assignment of the management?
Yeah, so they said which of the following is the responsibility of management and those charged with governance. So the option is providing the auditor with access to all necessary information. Of course, it's their job to provide, but it's not primarily their job. The main primary job is to prevent detection. Yes, primarily. Exactly. Okay, so number 5, and the final one, what does the auditor's report express regarding the financial statements? I think you got this one. C, an opinion on the truth and fairness of the financial statements. Yes, the answer is C. You are very, very correct. Yeah. So we have 2 more, professional regulations and harmonization of the accounting and auditing profession. So we'll conclude that in the next class. We have